What's up, dude? Hey, we're live, so don't say anything crazy.
Oh, I was gonna ask that. So how much phone we've been using downstairs? Just a little bit, right?
Why? You want to put it all up there?
Yeah.
Use as much as you need. We can always buy one that's cheap.
Also, I'm gonna go ahead and get the spray adhesive from the Guitar Center.
Okay.
I think that would work way better than the command strip that we're using.
Okay.
Yeah.
See me before you leave. I'll give you $20. Just bring back the receipt. All right. Yep. Thanks. What are we talking about today?
Well, I've already got the share screen up. I might as well.
Yeah,
we'll just do a quick little.
Do a little Tesla. What you ordered today?
I haven't gotten the email yet, but went ahead and pre-ordered this. Tesla's 1100 horsepower Model S Plaid, 520 plus miles. Big day at the track. So let me explain what this track time is. It's only 3 seconds slower than the fastest production car that's done Laguna Seca.
He said they'll get the.
He said they will get. This will be the fastest production car, not electric, not 4-door, not 2-door. This will be the fastest production car ever to do Laguna Seca. 0 to 60.
He'll get to the top when Roadster comes out.
Roadster will top it because Roadster will have a.
Will be the number one.
It'll be the fastest production car.
Yeah.
And I think it'll be faster just because it's going to be a little bit lighter and the wheelbase is going to be a little bit shorter. So you'll get that road. You'll get a little.
The fastest time on the track's like 109.
It's 109 or 107, and that's.
So I'm asking, do you think the Roadster would get to 109?
Shit, I don't know. That's race car fast, right? I don't know.
If the one you just bought, the Plaid is 200 top speed. What's the fastest production car right now?
Fastest production car here?
Yeah,
Laguna Seca?
No, what's the fastest production car made right now?
Well, it depends. I mean, if it's
would it be this?
If it's straight line?
Yeah.
Well, how fast is the Bugatti Chiron? That's got to be the fastest. Let's see what the Bugatti Chiron. Now, this is a $3 million car. It's pretty cool. 1,500 horsepower. By the way, they were all sold before they were built. Yeah, they only made 20.
304 miles an hour.
Yeah, it's very similar to.
You think the Roadster can get to 304 miles an hour?
It needs active aero.
Okay.
Oh yeah, here you go. Look, it only does 0 to 60 in 2.3, so the Tesla's faster.
Yeah. Top speed of 261.
261. Where is a quarter mile time? It's got to be in the.
They got to do it somewhere in there.
This is technically the fastest production car out right now that I know of. There could be something faster, but I don't think it is. McLaren P1's 9.8. That's a fast, very expensive car.
So your car's going to go faster than all those in the quarter.
Yes. Oh, here we go. Fastest production cars by acceleration. Yeah, who cares? Wiki. The Porsche 918 Spider. That is a gorgeous car. Stupid expensive. Very cool car. So it does 2.1 seconds, 2.5. So this is the fastest production car in 0 to 60. Oh, here it is.
Yeah, Model S.
The Model S P100D is the second fastest.
All right.
So
that price went down, by the way.
Oh, I noticed that. Yeah. So the Plaid is going to be faster than this. It's sub 2 seconds. So let's go down here. Is this quarter mile? The 918, the P1's a really cool car. 9798. This will be faster than that.
Be close, yeah.
All right, so the variant super short's
99.
99.
Silly.
Where's the old?
It wasn't good because it was only dual motor, remember? So it was only good in that 60. It's all the way down.
Here it is,
yeah.
2.43. That's with ludicrous mode. With Plaid, they already said with Plaid it's going to be sub 9. So we're looking at an 8-second quarter mile. It may well be a full second faster in the quarter mile than the fastest car ever built. Which, when you get down to these times, a second is a freaking eon.
Yep.
It's going to be so stupid. Quarter mile less than 9 seconds. Stupid fast car.
The Did everyone order theirs today?
I don't know. I mean, you got to order them now. Fully loaded, right under 150.
That's the only
In
one.
fact, there's their run. If you guys want to see their run,
Yeah, that was crazy too.
I bet the G-force meter looked bananas. That's a G-force meter, by the way. Our you can see traction, acceleration. That's what that thing is, and then that's obviously speed and their track position. But absolutely bananas. Absolutely bananas. All right. Let's get started here. I'm going to start with this, and I'm going to explain what's going on. The Federal Reserve and our fine friends in Congress are printing money. Now, what does that mean? You know, why has that not trickled down into consumer spending? Because what essentially it's done is it's created excess reserves that end up at commercial banks. Now, what do these commercial banks do? They buy mortgages, they buy credit card debt, they buy all kinds of stuff. One of the reasons you see rates as low as they are is the money has to go somewhere. Where's the money going? It goes into one of four places: auto loans, healthcare, higher education, and guess what the last one is? Real estate. So the more money that the Federal Reserve prints, the more money that gets thrown in from Congress via stimulus, the more expensive these assets get. That is exactly what's happening here, and that's going to be today's theme for the show. Housing market stays hot in default with mortgage apps up 7%. Mortgage apps are up. That's a precursor to house buying in the fall. This is supposed, housing is supposed to have this cyclical nature, right? It's hot in the summer, cool in the fall. I don't think that's going to happen this year. Refi's leading the way, almost 2/3 of the share of the mortgage activity because rates are so low. Rates ain't going up anytime soon. This is very interesting. I really like this guy and the way he writes. 6 million existing home sales. However, context is key amongst housing data. I'll let you read this article. I really like how Kenneth writes, or not Kenneth, what's his name? Logan writes all this stuff. He does a really, really great job. But I want to take you down here to this. This is where things get crazy. Oh, no, it's this paragraph right here. We have, on average, in the last 17 weeks, which is almost 6 months, roughly 20% year-over-year growth. But don't expect the 20% plus year-over-year growth in purchase applications to continue. He writes this in a way for mortgage lenders. Some of the positive growth was catch-up demand from those 9 weeks of a frozen market due to COVID. Even if growth fades towards single digits or even flat, this doesn't mean a crash is coming in 2 weeks. If 2020 has taught us anything, it's that the American housing bubble home price crash bears in the past few years have no idea what they're talking about because all they care about is trolling for clicks. These are not real economic people. I will absolutely 100% agree with that. People who are telling you that there is a crash coming know not a damn thing about real estate. This is why I gave them the new nickname Forbearance Home Crash Price Crash Bros. Sorry. This is the real crash that's going to happen. This is the real crisis that's coming. The big question for the rest of 2020 is whether or not we will get total home sales of 6.2 million. The context for this number is that 2008 to 19, my belief was that we would have the weakest housing recovery ever. But in the years 2020 to 2024, our demographics for housing became vastly improved. So the real problem is not a crash, it's a rapid rise in home prices that leads to speculation. But that is only going to happen after 2024. If you guys remember, one of the things Rob and I keep saying is, like, guys, you got 5 years in this window, max. At the end of 2024, possibly 2026, you want to start looking at liquidating your portfolio, especially in single family. if this continues to occur, I don't know why everyone's hammering near my office all of a sudden. Our building is under construction, if you guys haven't noticed. We're almost done with the stupid thing, and I think everybody's working on the studio downstairs, so bear with us. This is really interesting. Ginnie Mae is finally going to ban LIBOR-based mortgages. It only took them a decade to figure this out. Why? Because LIBOR was being manipulated by traders, mostly in the UK. They finally took some people to jail. I was calling this for like 10 years now. Before I was even in real estate, LIBOR was a complete disaster. So thank God they're finally getting rid of LIBOR mortgages because they were doing some really
Manipulated too much. Right?
Yeah, people finally went. I mean, they finally went to jail. They should have gone to jail a long time ago. But anyways, home sales surge again, 14-year high. This is existing home sales. Numbers up 25%, 20%. Home sales continue to amaze. There are plenty of buyers in the pipeline. There's no crash coming. Anyone who says there's a crash coming, immediately, if you're in their seminar, immediately leave.
Get up and leave.
Just get up and leave.
Unless it's Miami or Vegas.
Yeah, unless it's Miami or Vegas, then you can hang out there, right? Why is there no crash coming? Home equity surged in Q2.
Mm-hmm.
On average, you can walk in front of the screen. It's not showing that screen. It's showing this one. Brian just walked in. The second quarter alone, homeowners gained an average of $10,000 in equity.
Yeah.
They have massive equity in these homes.
What do we think? We think we're a quarter or 2 quarters away before the HELOCs start booming.
Oh, HELOCs are going to start. They're going to start banging HELOCs out again.
Yep.
The number of mortgage properties with negative equity decreased by 15%. There's only 1.7 million homes with a loan to value of 100% or more, which is less than 3% of all mortgages. 97% of mortgages have some kind of equity in it. There's no crash coming. I don't know how else to. Unemployment expectancy remain elevated. It's just so bananas out there. Fewer homes being flipped, but profits are up.
Yay!
Fewer homes are being flipped because fewer homes are going to be sold. That's actually what's going on. The median sales price of flipped homes was $232,000. Median paid by investors was $164,000. The net there is $67,000. All right, let me explain what this means. This is gross before rehab, holding costs, any of that stuff. That number is maybe a third. You take $67,000,
Yeah, that's about right.
multiply it by a third, it's about $22,000. So when everyone's running around talking about how much money they're, bro, I'm killing it flipping. No, you're not. You're not in this market. You are. No way. You're making probably about $23,000. That's my guess.
And getting 55% tax bracket.
Yeah, in a 55% tax bracket. So that's where you see your profits are increasing. But it's funny. Coronavirus depressed home sales, which is true, but not prices, which is also true. So in any case, things are absolutely on fire in this marketplace. If you're waiting for the other shoe to drop, it's not going to happen. And again, going back to that previous article, the big problem that's going to happen in this marketplace is the housing crisis is not a crash. The housing crisis is prices rising much faster than wages, and it turning into a speculative market. Again, I'm going to keep pounding this into people. If you have a credit score below 720,
we're missing stuff. Oh no.
Or what?
You didn't hit the.
Oh, you got to be kidding me! I'm not going back and doing this whole thing.
Just hit the screen for now. This one.
This is the stupidest software on the planet.
There you go.
I'm not going back and doing it.
It's all right. Just keep going. Yeah.
This is going to be the second most important chart in real estate. Mortgage originations by credit score. If you have below a 720, it's almost impossible for you to get a mortgage. I've got some friends of mine, I'll just put it that way, that have an owner financing company, and they can't handle the number of leads that are coming in.
Right.
Because if you've got less than a 720, your mortgage options are almost zero. Now I will go pull up that one article. Let me pull it out. It's in here. It's one of Logan's, your boy Logan. One of Logan's articles. I'll pull this up real
Looks
quick.
like a villain.
He does. He looks like he'd be a good looks like a Marvel Dylan.
Or the silent movie era, right?
Yeah. But he's a good analyst.
Yeah.
He's a real good analyst. Even though he's got French cuffs. Analysts are not allowed to have French cuffs. It's kind of a rule. It's a little too flashy for an analyst. This is the big risk. Oh, wait. No. Oh, here it is. This is the big risk. My biggest concern is that real home prices could take off. Good housing demographics, housing tenure at 10 years, and low mortgage rates are a perfect recipe for unhealthy home price growth. Median sales have already risen 11%. I'm not saying home price growth will somehow morph into a speculative bubble like it did in the 2000s. Our credit lending standards will prevent that. But housing could become considerably less affordable even with low mortgage rates if this continues. I'll tell you when the telltale sign when this becomes an issue is when we see the 40-year mortgage. I'm convinced that 40-year mortgage is coming in widespread. Like when you're getting 40-year mortgages in Houston, Texas, the bubble is near. Now, that doesn't mean it's coming in 6 months. It's probably within 5 years. That would be my guess.
There becomes the affordability crisis.
Right. When you hear 40-year mortgages and then everybody, and you're including your broke cousins, are getting a mortgage, then there's a problem. That means there's going to be a huge downturn at some point in the real estate market. Not today, not tomorrow, but this is something to watch certainly over the next 10 years. So, all right, guys, we got to go to, let's see if we got any questions. Comment. How about you boys? Comments for the Peanut Gallery? You too?
For us?
Yeah, comments, questions.
If you're not in the mastermind, it's time to join because next Monday, Jason's going to start finding properties for you personally.
Yep.
6-week program. So that's a big one you guys got to consider. I think there's 3 or 4 of you that have reached out. It's time to close that deal and get going. And then if you're thinking about renting office space here, there'll be an email going out tonight that says, hey, here we go. Come walk through the building on Saturday morning. We're at the point now where you can walk through without a hard hat and without steel-toed boots. So if you're looking for space, we got a few open, and Russ will be here, our partner, is leasing it. So Saturday morning, 10 o'clock at our building. If you're interested, you got to reach out to us first, 281-401-9008.
All right, we'll see you guys.
Thanks, guys.